All right, traders, welcome back. The S&P just broke below its 200-day moving average for the first time in over 200 trading days. The Fed discussed raising interest rates at this week's meeting. Israel struck Iran's South Pars gas field, the world's largest natural gas reserve, and Iran fired back with hitting Qatar's Ras Laffan LNG facility. I think that's how you say it. The single largest LNG export hub on the planet. So an analyst this week said the war is now, quote, hitting the plumbing of the global energy system, end quote. So the market just logged its fourth straight weekly loss. If you want to look at the weekly charts here, nothing but red on the way down relative to the closes. So this environment that we are operating in is heading into next week. So let's get right into it. So the macro picture, where are we actually? Again, the S&P 500, it broke below its 200 EMA for the first time in 200 plus trading days. So we kind of have to let that sink in. This is not necessarily a minor technical event. The 200 EMA is kind of like the broadest definition of a trend. And when you lose it, especially after a multi-year bull run, it gets people's attention. And this is the same for the NDX as well. You can see that it closed below the 200 EMA here. They do have different looks. We'll get into that shortly. However, also, this is the fourth consecutive weekly loss, the longest weekly losing streak in over a year. The Dow, the NASDAQ, Russell 2000, all of them are now approaching or in formal correction territory, which is naturally defined, not naturally, but defined as 10% off of recent highs. The Fed, they held rates at 3.5 to 3.75%. But the headline, it isn't the hold. It's what Powell said. Actually, the Fed raised its 2026 inflation forecast at 2.7% from 2.4%. And the market really didn't like that. And Powell confirmed that the rate hike was discussed at the meeting. So it's not really the base case, but the fact that they discussed it tells you everything that you kind of need to know about where the Fed's head is at right now, where we're potentially heading. So markets are pricing in 0 cuts in 2026. The first cut may be pushed all the way back to July 2027. The earlier this year, the market was pricing in 2 cuts. So that narrative is basically dead at this point. The PPI came in at 0.7% month over month. The third consecutive month of acceleration, 3.4% year over year. And here's what kind of makes it a little worse. That data was collected before the oil spike. So service-driven, service inflation is kind of the hard kind. It doesn't go away because of one pipeline restarts. So this, we're hearing a lot about stagflation. So this is a potential stagflation setup, slowing growth, sticky prices, higher for longer rates. So things like that. So just be mindful of that word into the next week. Another thing is a 10-year treasury 10-year treasury yields hit 4.32%. So that's kind of also a headwind for growth names. All right, so what really is the name of the game so far? Let's look at the S&P 500. This is the cash index. You can see we're 6.76% off of all-time highs. Actually, looking at the daily, I don't know why that's changing there. 7% off all-time highs. Either way, we can see that we tagged 7.5% and we got a little bounce. But the more concerning thing is we've been in a multi-month consolidation since September. We did break the lows of September back here. And we also closed below them. We closed below the 200 EMA. This was prior support here multiple times. We closed below that. Here I have 63, 60, 58 marked. Those are the October lows. What did I mark out here? September lows there. And so, sorry, I think I misspoke earlier. November lows we broke. I have September lows marked out. So November, October, we obviously took those out. Next, we could retest 63, 60, 58. Those are the lows of September. I wouldn't be shocked if we head down further that way. Trend lines, EMAs, they're heading down. The trend is obviously down. We can start getting some momentum with a lot of potential supply overhead here. The story is similar for the NDX, although tech has actually been holding up a little bit better relative to the SPY. You can see this prior area of support has held again. We did break the lows right here. of November. However, we didn't technically close below them. It does matter, but we'll see what actually happens coming into next week. We had a little break here, consolidation, and now we broke the lows of this consolidation. You can see these areas I have marked out as an area of interest. Downtrend, the EMAs. 8 is down, 21 is down, 50 is down. We're below the 200. So the overall market landscape here it's not the best, especially in tech land. We'll go over that shortly, but I think it's better to spend most of our energy on the energy names coming up this week, specifically because energy has been the number one performing sector for over the last 2 consecutive weeks. So that's not really an incident. That is kind of the market telling you something. Here's why this past week was a significant escalation beyond what we have seen so far. So Israel, they struck Iran South Pars gas field on Wednesday, which is why you could see on LNG, we had a huge spike on Wednesday here. And so South Pars is the world's largest natural gas field. It accounts for roughly 40% of Iran's total gas production, and it sits on a shared reservoir of Qatar's North Field. Iran, in retaliation, by striking Qatar's Ras Laffan industrial complex, which is the single largest LNG export facility in the world. Qatar's state gas company confirmed the extent of damage. Analysts, so Wood Mackenzie, this is who I'm getting it from, one of the most respected energy consultancies in the world, said Thursday that the attacks fundamentally, quote, fundamentally reshaped the global LNG outlook. So this is a disruption to the global natural gas supply, now likely to last longer than 2 months, right? So this is, I think, something that can kick off a potential trend in LNG. You can see that it broke out. It was consolidating. If we look at this weekly here, it's really doing nothing, right, for quite a long time. Here are the highs. It was consolidating near these highs, and now we have a catalyst. We have a catalyst that to actually get prices potentially moving out of this base. So moving forward, probably over for the next few weeks, LNG I think is in play. What I would do is I would look for pullbacks. I'm going to remove these all-time high levels here. I would look for pullbacks off of this move here. We have a gap right here, 267.25 to 274.25. I know the daily doesn't show it. I don't know what's up with that, but the 30-minute time frame here, you can see that I have an anchor view app from the news, from the breakout, and then the following day, anchor VWAP from the high. So price respected the anchor VWAP the next day, and it's closed near it on Friday. So I would be looking for a potential play in LNG. I would be looking for an entry on any retest of this 274.25 area, 267.25 area, for a potential long entry. I think this is the time to potentially enter long in LNG, especially with this backdrop here. So I think that is specifically interesting for energy moving into this week. Let's look at ExxonMobil. You're going to see that most of these names, Exxon chopped around, broke out of this consolidation. I'm still in Exxon. I'm holding it for a little bit here and just trading the process, and whatever happens, happens. But I am trailing. I have a trailing stop going on. CVX also looks good. See how this is up and to the right. Trend lines are train tracking up and to the right. Everything looks pretty good in CVX as well. Halliburton, this has broken out of this consolidation area. I'm gonna extend that just a little bit. Ideally, it holds if you're long here, and it starts pushing away from this multi-month, multi-week consolidation. VLO refineries are also still in play, in my opinion. So in energy, this looks good, right? Up into the right. MPC, another refinery, up into the right. LNG just went over that. KMI, Kinder Morgan, this has potential to continue. We just need this to break these highs here. It's a little sloppy in this area, but I do have an alert. I think this 32.55 area could be an area to risk against, specifically the low of Thursday. I do think that is interesting. We can look at UPS. UPS consolidating here. I still think this 91, 90-ish dollar level is a level of interest. It looks like it's continuing lower with the shipping and everything with the Strait of Hormuz being closed. A lot of things are being held up. And so you're talking about diesel and insurance and all things like that. So they have a lot of headwinds. FDX had earnings. It popped and it did nothing but sell off. I was saying 320 might be the next area of interest. I said it sometime last week, probably last Friday. It didn't get there, obviously, but not yet. The overall market's still heavy, so I'd be looking for more downside there. CME, the correlation of market down, CME up that typically happens is not happening at the moment. This actually looks like a potential short. The only thing that I do not like is it is by a potential support area. So I wouldn't be shorting CME just yet simply because it is near a potential area of support and it has confluence of the 50 EMA. So it's not the best setup. It might be interesting moving forward actually as a bounce play, especially if the market wants to continue to roll over. This might benefit from that, but we shall see. It really started moving with the future contracts with gold and silver and all that hype. So we'll see if that continues on, but it's an area of interest. Now, let's talk about defense names real quick. Defense, I think, was on deck. It's not playing out the way that I thought it would be simply because of the war. I thought this would boost these names. They broke out and they kind of failed to break out. So LMT is back in the range. I do think this area 59, 595 is an area of interest. It's at the 50 EMA. So we might get a little bounce here, but it's underneath the 21. We got an 821 crossing. It's not the most beneficial to be here right now. NOC, it's actually kind of sloppy. It's in a downtrend short-term wise. You got the 821 pinch. If you pay attention to that, it is at the 50 EMA. It's at a prior area of support. It could be an interesting level. You might be able to buy within this prior area of support and like risk against 688. But if you're wrong, get out of the way. There's no need to hold against this stuff. GE is at actually an interesting area of support. This might be an area you could also potentially risk against. Maybe this low here, 279.64. You can go 279.50. It already kind of started bouncing a little bit on Friday. It got bought up. It's also near the 200 EMA, so it's a potential area of interest for GE. RTX, it's just back in range. It's not really doing anything. And then that brings us back to energy. So you can see really the energy and defense I've been talking about the last couple of weeks. Energy has really been really the main focus of things. And defense names have kind of fallen off the map. So really, let's talk about tech right now. Tech is kind of the falling knife. Catching a falling knife is never really a good idea, especially right now. So the setup of tech is not, it's not the best. The S&P 500, NASDAQ, they're below their 200 EMAs. Fed discussing the rate hikes into oil shock. Stagflation narrative is somewhat popping up. The 10-year yields are at 4.32%, so that's kind of a headwind there. You have growth multiples are still historically elevated going into all of this. The GTC Nvidia that was, highly looked forward to. The hype was there per usual, but what did Nvidia do? Nothing. Closed down on the week. So tech is really just, it's not the place to be. It's still not the place to be. It's overall heavy. So let's look at Microsoft real quick. It closed below these, or basically at these lows. Let's see, what was this low here? 381.71, 381.87. So technically it didn't close below this low, but it closed near it. So you could get a little short-term double bottom here. You can say that, but it wouldn't be confirmed until it broke this high. I'm not trying to catch this. Yes, obviously it could bounce from here. I think these names, before we even talk about them turning around, I think they have to chop. They have to chop around, fight an actual bid, consolidate for longer, and then you can start turning around. I still think on Microsoft, we can get a 367.36 gap fill here. Now, if the market gaps down here on Monday, which would be wild, the overall, here's actually a plan for Monday. If the market gaps down on Monday, a significant amount, let's just say it gaps somewhere to like 640, 64.40. I think that's a short-term buying opportunity for a bounce. So carrying that thought into some of these names. Some of these names they've been sold off for let's just say from these highs to these lows, had an 8% move over 11 trading days or so. That's not that significant, but it's Microsoft, right? But anything selling off into this gap, I would look for a reversal trade to buy into for a short covering. Nvidia, here we go. GTC was this week. What did it do? It closed down 4.2% on the week, closed below the 200 EMA. It continues to chop around and do nothing. Apple is at an interesting area. This prior area right here, this 244, 243 area has been a level of interest. I'm going to close that pivot on gap there. Has been an area of interest. You could nibble at a little bit here, but again, I think that the weight of the overall market, it still looks like it could start rolling to the downside. So I would be mindful of that. I'm not super interested. Amazon, nothing to speak about. Broadcom continues to consolidate, just continues to tag the 200, looking dead. Meta's getting hit. It's at a prior support area around this 580 level. I think any gap below this 580 and getting bought up could be a decent trade for a long bounce. But overall, short term is still to the downside. So I'm going to mark out this area right here where a lot of bottoming tails are. I would watch this 588 to 582 area. If not, I don't know, heck, there's a gap down here I haven't marked out yet, but it looks like it's around 570.95 to 548. So maybe 548 could be next if we continue on down. Netflix, this is starting to work into the gap. It's below the anchor VWAP from the gap up on Warner Brothers. And it consolidated here, had a nice little breakdown. I would look for a gap fill on Netflix. Tesla, just bleeding. It's not really doing anything. It did close below this prior support area. So now we have a lot of potential supply overhead. This could push it down even lower. I'm looking for this 358.30 area to hold. There's a lot of potential areas to hold around here. So I would be, you can even keep it simple. It's at here's the breakout level here. We can draw that there. So this could be an area where it holds, but again, if the market wants to continue to roll, this just might continue to roll. This might even get to more so 340, 350, somewhere around there. So don't count that out. It's not impossible. Google's pretty strong. We have a little descending triangle here. It continues to hold this 300 to 295 area. If the rest of the market wants to break down, this could go to 270, 275, wherever the 200 EMA is at that point. It's an area of interest. I would look for potential further downside on Google. It's a strong name overall. My CrowdStrike trade that I tossed out there, it would have been doing well if I got into it, which I did not. But basically, I was looking to risk against this high here. I'll toss out a couple ideas. I think I tossed it out on it was Tuesday to risk against this high. That would not have worked. But then again on Wednesday, I tossed out an idea to risk against this high. So you can see the next couple of days, it didn't break that high. And then once we got a breakdown around this area, I sent out a tweet saying, hey, 440, 444 to 442 might be a good area to risk against because it continued not to break this. Would have been a decent trade. I didn't take it myself, but overall, I do think CrowdStrike, any new, I think this is getting a little war pump because of cybersecurity. Now continues to be in a downtrend. Palantir, I think this is getting a little bid from the war as well because of government contracts. We all know that they're used, especially when they were used for Cuba to get Maduro. And so I think this is being propped up by news, by war. And however, if overall tech continues to be weak and the war gets resolved, what's propping this up? Not much. So my overall thought is still lower. Maybe it comes back down to this 120, consolidates and holds 120. They're the $100 kind of psychological level there, but it looks lower. Hood This also, it broke out of this consolidation area. It didn't hold it. Came back in opposite end range target, hit that opposite end range. We'll see if it wants to break down even further back into this base here. Would not be ideal, but there's potential. Everything is down. Micron has been holding up pretty strong, but we have a failed breakout here. So we want to see this 21 EMA hold, which it is so far, but really it might just consolidate. If this fails, one scenario is a failed breakout. So end range is opposite end range is target. So this might just go right back to 360 and just continue to chop around. AMD continues to form this descending triangle. The more time this 200 EMA right here is broke, the more time or is touched, the more time this support 195 to 192 area is touched, the more likely it is to break. But if it doesn't break, this could end up breaking up to the outside, to the upside. TSM looks lower. I would watch this 319, 318 area for potential support. Oracle, not really doing anything. I don't know if you want to call this a bear flag, but you could do a uptrend line. It's like holding it ish so far. I wouldn't. It just doesn't look good though. It doesn't look good. It failed at the 50 EMA. It's below the 8 and 21 again. Oracle might have some more downside. It did nothing but sell off since the earnings, so I wouldn't be trying to catch this falling knife. Adobe consolidating near these lows here. If it breaks that, geez, I gotta look on a weekly. Heck, if it breaks that, maybe even goes down to 215. That's a possibility. Coin bouncing off weekly support here and continues to find supply in this 213 area, 213.50 area. I just think this is probably a short cover rally. Honestly, my overall view of the market is heading down. I could very well be wrong. I'm okay with that, but I'd rather be more on the defensive side than just tossing out a whole bunch of these, just a bunch of cash when the overall market looks weak, and then I get crushed. It's not worth it. The market is not easy to trade right now. If you're day trading this, volatility is there, which is nice. But if you're a swing trader like myself, it makes it a little bit harder. So you have to do your homework like what I'm doing, and be prepared ahead of time. And you have to know your levels. You got to test them, have them set, have your thesis, have your ideas, know your risk. And then if you're wrong, then you're wrong. Just get out of the way. Don't become a bag holder. It's not easy, but it is simple. And simple does not mean easy. IBM, I'm going to take away this pivot on gap here real quick. This looks like it might be heading for another leg lower. I would, it's below. It looks like it's below this interview. About my educated guess, it is. Yeah, it is. So we're getting a little bit of more momentum. Here's a little micro, quote unquote, double top here. I'd say this is the support area. It broke that. IBM looks like it's heading lower. Maybe I would be interested at it at 214, this support area right here. All right, that concludes this week's video. Again, we don't really have much coming up Fed-wise this week. We don't have much coming up on earnings, so we don't have to be like head on a swivel with that. However, you need to understand something, okay? It just takes one headline for this to be over, right? So geopolitical headlines every day. The war is the market. One ceasefire rumor could be an energy flush and a relief bounce in equities. Okay, that's all it takes is one escalation equals energy higher and equities potentially lower. That's how I'm viewing this. So you're not trading economic data right now. You're kind of following the conflict. So keep a close eye on any Trump statements, any ceasefire negotiations, any further strikes on the Gulf energy infrastructure. Continue to watch crude oil levels closely. Above 95, it's the stagflation narrative. It stays dominant. Any meaningful breakdown in oil, say, 85 or below, that would be a signal that the market is pricing in some sort of resolution. So the bottom line, energy and defense, mostly energy, potentially defense, at clean pullback levels remain a place to be in. Tech, I think, is a falling knife until proven otherwise. So risk management is not optional in this environment. You have to size appropriately, you have to know your stops, and you don't let a headline force you into a position that does not have a setup. Hopefully that helps. Thanks for your time. Trade safe. See you next week.